Hello, Jim here. One of the most important parts of being a great investor or trader is finding really good companies. Today, I want to share with you my two favorite tools for doing just that. I'm also going to talk about the strategies to work with these kind of companies. And then finally, I'm going to share 20 companies that if you had invested in back in 93, you could potentially have millions of dollars. So stay tuned. I think it's going to be well worth your while. Okay, let's jump right in. One of the things I like to tell my memberships is I'm an investor and a trader. I do have some members that are purely traders. They like to trade options and earn income off it. And they don't really care about owning the stocks. Having started as an income investor in the 80s, I really enjoy the process of finding great companies and then sticking with them long term. Typically, it works out really well. At times, maybe it doesn't. I've had a few stocks that didn't do well. One is Lumen, another one is Big Lots. Even Intel recently hasn't done as well. But if you pick the right companies, you use really important guidelines for finding them. You look at good profitability, you look at good growth, you look at good, um, you know, amounts of debt, meaning they don't have a whole lot of debt. If they pay a dividend, what's their payout ratio? Hopefully it's a low payout ratio, and they're growing those dividends. So there's a lot of different criteria you can look at. You also need to look at management. You need to be sure that there aren't any shakeups management wise, or that there's potentially some bad news on the horizons. Like with the tariffs, there's a lot of companies. I believe Best Buy was down quite a bit today, and it's probably related to the tariffs. I haven't dug into the reason it's down so much, but I personally believe picking the right company, sticking with them long term, you can grow your portfolio to a huge amount. And it's my preferred way to do it. At the end of the video, I'm going to share with you the 20 stocks that if you had invested in almost any of these 20, you could potentially have earned millions. Your portfolio would have grown. One of them that I did look into a little bit more because we use them quite a bit. If you had done a $10,000 investment back in 93, you'd have over $5 million. So I'm going to share with you the top 20 going back to 93 and what, if you had invested a certain amount of money, what it looks like now. So I'll share that at the end of the video. But part of the key for me is finding these great companies, and the tools keep getting better and better. I primarily like to use two tools. One is Seeking Alpha. They have screeners. They have like an earnings calendar. They have a lot of pretty nifty things that can help you identify certain types of stocks and ETFs. They also have a lot of people who are kind of analyzing the stock. They encourage people to join them and become a writer. If you're a writer, you actually can get the premium version for free and potentially get paid. If you gain a pretty good following, you could potentially make some pretty good money with it. So Seeking Alpha is great if you're a fundamental type investor. And again, I'm more of a fundamental. I later became a little bit of a technical. But Seeking Alpha is great for fundamentals. It has everything broken down. You can look at momentum, profitability, valuation. It also has lots of ratings related to all those things, like the quant rating. So it works really well with identifying fundamentally strong, healthy, good companies. Now, Barchart is my other favorite tool. I have both of these. I pay for both of these. Barchart, if you're a technical person, is the better choice of the two. It has really nice advanced graphing. It also has a really nice option chain and a lot of other, like a cheat sheet for technicals, just a lot in there. You can also do some pretty advanced screening, not just on fundamental type data, but also on options related data like IV. You could also look at the Greeks and the different types of, you know, criteria technical wise that you would want to use. So I use bar chart kind of after I find a company that I like fundamentally. Then I'll use bar chart. I'll look at the interactive graphing, and I'll look at the Bollinger Band. I'll see where it fits on the Bollinger Band. I'll look at the different averages. Then I a lot of times like to use the option chain within Barchart, more so even than the Fidelity option chain or the Schwab option chain. I tend to have both Seeking Alpha and Barchart open up pretty much all day. So I'll do some research. I'll look at the option chain and bar chart, just see how far I want to go out. I might look at different expirations. I also like to use it to look at how much volume. It does provide the Greeks, which is nice. Seeking Alpha's charting does not include the Greeks. At least I haven't found a way to do that. So both tools used together seem to be kind of a perfect situation for me. I'm able to find what I want to find, and able to make the trades that I need to make pretty quickly. I still work, so I like to get, I do 1 or 2 trades a day, then I get off the market. I try to set goals for weekly, monthly, and daily, and it works out really well if I can have the tools that allow me to find the companies and the positions that I want to take using different strikes and using different deltas, as well as where it is on the different averages, like the 20-day average, the 200-day moving average, and some of those. So both tools working together, in my mind, are probably kind of two tools made, almost made to work precisely for the type of trader that I am. Again, an investor as well as a trader. Now, one thing I do like to do is I use it for different things. So one of the other pieces I really like is the Seeking Alpha portfolio. It also allows you to add criteria within your portfolio, so you can sort by like return on equity, return on assets, return on capital, debt to equity. You can also look at all the different ratings, and you can sort your portfolio. So I found I've been using that as much as watch lists within Fidelity and Schwab. So just another piece. And what that allows me to do is I can also sort by the stock price. I can look to see, well, if I want to do a wheel trade, and doing wheel trades are one of my favorites. And I like to do it on fairly inexpensive stock. So a lot of times I'll sort, by the stock, then I'll look to see how that company looks, return on equity, return on assets wise, as well as the quant rating. And it just makes it fairly easy to identify when a company is potentially a good candidate for running the wheel on. If it's a more expensive stock, or a stock like an Amazon or a Google that I really want to own, then it also will give me the opportunity to kind of dig deeper into those particular companies, and also look at any news, or anything that might be impacting them short term, and dig a little deeper. So, and for those kind of companies, I like to do what I call my go-to strategies, the vertical put credit spread. So I usually will go out 30 to 60 days. I'll pick a delta that's around 15. I look at the stock price compared to what the strike price. I like to get a little bit more than a 10% discount. So if the stock's trading at 170, I'd like to try to pick it up at 155 or 160, which a lot of times is right around a 15 delta. I originally went to a 15 delta back in 22 because I had so many positions get assigned. So by lowering that delta to a 15 delta, it worked out really well. Some of the other strategies I like when the market's not crazy like it is right now with all these tariffs, I like to do iron condors. So a lot of times, if the market, like once the tariff situation is over with, I'll probably look at doing more iron condors. They work really well with ETFs. I've done them on IWM. I've done them on XLE. It's just you don't want the market moving a crazy amount. You want it to stay between these, the call wing and the put wing, and kind of move sideways. And you can make some pretty good income. I do take less risk when I do iron condors. I typically will do more like a 10 or 12 delta versus a 15 delta if I'm doing a pure vertical put credit spread. I also will take less risk on the call side, especially if I don't own them. If I own a couple hundred shares, then I might not even buy the long call. I may do it as like a covered call. But recently I've been buying long calls. I'm also trying to buy more long puts. And I'll probably continue to do that when I do iron condors. I'm also telling people when you do a vertical put credit spread or you do a call credit spread, if that long put, if it's really inexpensive, like I sold it or I made a trade earlier today and the long put was $1, I should have bought three or four of them. If it's that cheap, buy three or four. Why not sell one put and then if it's $1 or $2, then buy three or four, because if the market goes against you or the stock goes against you, those three or four long puts can become worth quite a bit, and they'll actually help you with adjusting your trade later on. So just a few of the things I wanted to mention. I'm going to do a quick demo of what I like about Seeking Alpha. I'm just going to stick to the main points, the things I really use. Same thing with bar chart. And then at the very end, I'll share with you these 20 stocks that you could potentially, with any one of them, become a millionaire. So stay tuned. This next part's really going to be interesting. Okay, now I've opened up Seeking Alpha. What I typically like to do is find particular companies, and then I'll open the company. I'll look at the summary data, like this is NetApp, one of the companies I currently own. I'll look at the summary. I'll look at the ratings. You can kind of get a feel for, where the company may be doing really well, or maybe where they're struggling a bit. Here you can see NetApp has got some issues with growth and potentially with revisions. So maybe their earnings, they're revising, or their guidance, they're revising down. I also like the fact that you can get to the financials. One thing I really like to do is look at the balance sheet and come down and look at how many shares outstanding, meaning are they buying back shares? So here you can see the shares, total shares, and they've gone from 206 to 203 to 12. So you can see they've been decreasing, going all the way back to, it looks like 2021. So they went from 223 million shares to 203. So they're definitely buying back, which is something I like to see. I also like to look at their revenue. Has it been steadily increasing? They've been kind of more sideways. They did go up here, and then they dropped a bit. So they're a bigger company. They've been around longer. They also pay a dividend, I believe. So here I like to look. It's 2%. I'm less worried about the yield. I more want to see what's the payout ratio. They're not spending a lot of money on dividends. The five-year growth rate is somewhat small. You can also see, dividend history. You can see their latest payments, and they've been paying dividends for a fairly long time. So I like to look at that. Valuation. I like to come over to capital structure. I'll look at market cap. So they're a $20 billion company. They have total debt of $2 billion. I like to see 10 billion or 50% debt to equity, which would be around 10 billion. They're 2 billion, so that looks good. They have a fair amount of cash, almost 2.2, almost 2.3 billion in cash, which is a good thing. Then I like to look at profitability. They have good profitability. Return on common equity is really high, 114. I watched a study, or I read a study not long ago that said any company that has return on common equity, they studied those kind of companies and they did fantastic over the years. So I like to see this. It's all A's or B's. I also like to look at this cash flow from operations, which is an A. So from operations, they're bringing in quite a bit of cash. Momentum, they're not much of a momentum player. And that's more about, is the stock growing? Are people paying a premium for it? Then you can also look at peers. A lot of times I'll look at peers. I'll see, is there another company I also like to look at Pure Storage, HP, Seagate. It's gone through the roof lately. I do own some Seagate. Like a lot of us, I've got some covered calls that are now deep in the money, which kind of sucks. Then here I can look at options. If I click here, I can see how their puts and calls look. I don't like the fact that they don't have Delta or the Greeks here. But you can get an idea of, like in this column, you can see all the volume that they have. So they have quite a few. They have a lot of open interest, and they have a lot of contracts to pick and choose from. And then there is charting. I like how they compare it to the S&P 500. So how does NetApp, how is it done? 1 year is kind of hard to look at, but 5 years, you can see NetApp actually did a little bit better than the S&P 500. 10 years, a little bit better. So the other things I like to use, I like to come here and look at the top stocks. And this they update based on the numbers, like the quant rating. I believe this is sorted by the quant rating, but you can look at valuation, you can look at growth, profitability. I do get a lot of ideas here. They also have one for top ETFs, so you can compare and contrast different ETFs and which ones you might want to try. And by clicking on them, you can dig deeper. Then they have different stock screeners that you can use that are already pre-built. Same thing with ETF screeners. You can do comparisons of different ETFs and different stocks. They have a newer screen that I really like. I did this growth and dividend, so you can create your own screen. You can pick different values here. Um, if you click on the advanced filters, you can pick lots of different things. You could look at ratings. You could look at quant factor grades, valuation, growth, a lot of different things you can pick and choose. So, um, and I've set a few of these up. I do like using this too. It makes it nice. Um, and then they also have nice calendars. So if you just change it to earnings, they have this orange dot is that it's in your portfolio. So here I can see here's for the 29th, which is today, I can see who's got earnings. NetApp has earnings. Marvel Technology has earnings. Best Buy, that's pre, so Best Buy must have had some rough earnings. That must be why they're down. Hormel Foods, Path, so a lot of stuff here. I like to use this because I like to see, well, who's recently done earnings. If I'm selling covered calls or puts, I don't really want to be trading in something that has not had earnings yet. Nvidia had earnings yesterday. They went quite well. Salesforce did too. I think Salesforce is down today, so I haven't dug into their earnings, but here's Pure Storage, another one I like to trade in. So I use this fairly often, especially during earnings season, which seems like it's almost always earnings season. So there's a lot here. The other thing I really like is the portfolio and the way they do the portfolio. A lot of times I'll sort by quant rating, and then I'll look to see, well, who's down and who might I be interested in. I can also look at return on total capital, and another way, typically if a company is doing really well with return on total capital, then it's typically a good company to invest in. So APP is one I got involved in earlier this year. I wish I had bought some because it shot through the roof. I think it's got a 400 or 500% return. Bluebird is one of my favorites to trade with the wheel. If I do the wheel, I'll come over here and I'll click on price, and I like to do around $10 to $15. So this SoundHound is something I've looked at. They don't make money. That's something else. I will not trade in companies that don't make money. I will put them on my watch list, and once they start making money, I will trade them in them. But these are all good candidates. Path, I've done some trading with them. SoFi is one of my favorites for running the wheel. I don't necessarily want to own SoFi. I do think it's going to do really well long term. Mara, I do a lot of wheel trades with that. And then I can, if I find something that's not on the list, like let's look at IBM. I don't think IBM's on the list. We can look. Now I'm following it. What about, who can I think of that's not on the list? How about, we'll just pick one that's not. Here's a bank limited. So you see how it has follow. It's relatively easy to follow a company. You just click it, and then you could have multiple portfolios, but if I just click here and then click apply, it'll add it to my portfolio. So, and then it would be in this portfolio list. Right now I only have one But again, you could have multiples. You could have some for dividends. You could have some for growth companies. You could have some that work well for the wheel. And they do give you the ability to set alerts, which is nice. You can download it. You can change the layout. You can edit, add symbols. So they do a really nice job. By far, this is probably my favorite tool. I like bar charts, and bar chart, and I've been using it more and more. But by far, Seeking Alpha's pretty much open all day as I trade. So that's Seeking Alpha. If you're curious about it, I am an affiliate. There is a link in the description. I will get a little bit of a kickback if you sign up, but if you sign up through me, you do get a bit of a discount. I think you get a free week and you get something like $30 or $40 off. So just wanted to share that. Let's next jump into bar chart. Okay, now I've opened up bar chart. I'm a premium member with them too. This is the main page when you first open it. You can also use it as a free account. It limits how much you can see. So if you're looking at option information, it may limit it to like 25 companies. But I used it for quite a while before I ever started paying for it. Now, I do like how they have a lot of interesting news articles on the front page. They also talk, if you're curious to what's going on in the market, you can find out usually right on this front page. So here they're saying stocks supported by tariff ruling and NVIDIA earnings. So the market was up a lot more earlier today, and it's dropped back quite a bit. So there's a lot you can see here. You can break it down. You can look at different choices related to investing. If you're curious about currencies or futures, my favorite thing to do is come here to options, and then they have this most active option, so you can see which companies have the most activities. So this sorts it by volume, so you can see Nvidia, which makes sense since they had good earnings. Then Tesla, then Apple. A lot of times I'll come down here. If I'm looking to sell puts, I'll see, well, who's down? I don't typically trade on GameStop, but some of these like CoreWeave, I don't know enough about it, but it's something I might look at. But here's AMD. I talk a lot about AMD, and it was up early, but now it's down. You've got Google and Alphabet. Now, when I find a company I want to research more, you can click on it. I don't really look at this bar chart technical opinion. I don't necessarily agree with it. So it's saying a weak sell. It does it a lot by momentum, which I think AMD is one of those that's probably, once it gets some momentum, it's going to shoot up. You can see it shot up, then it came back down, then it shot up, and now it's come down and come back a little bit. It's still only at like 112. I like to look at the interactive chart. So I've got it set up with the Bollinger Band, and it remembers how you have it set up. So you can pick different criteria to use. I like to keep it relatively simple. So this is the standard Bollinger Band. I like to sell puts in this area, probably in this lower quadrant. Calls, I really like to sell calls up above the upper band. I also have RSI down below, so green above yellow is typically good. The RSI is, if it's below 45, I don't know, it's almost like a screaming buy, or, screaming to make a trade on it. But at times you'll see it's momentum if green's above yellow, and if green's below yellow, then it typically means it's kind of lost popularity, and the momentum is slid a bit. So I'll use that. I'll come down then to this option prices, and I really like their options chain. So I use it more so than I do for Fidelity's or even Schwab's. Here you can pick the different dates. You can do it near the money or 20 strikes. They will also allow you to set up alerts with it. You could watch, if you had more criteria. Um, so it does a nice job. And here's the puts. So like with AMD, if you were to make a trade with them, I would look at making like a 15 delta, which is right here, right around 100 is a 15 delta. Now this is probably expiring tomorrow. So if you went out to between 30 and 60 days, so maybe 718, which I believe is 50 days. Yeah, you can see the DTE up here. So it's 50 days. I again would do a 15 delta. So I'd look here, that's a 5, 13, 20. So in this case, instead of taking the 13, I would probably take the 20. So I'd look at doing 100 again, but I could make between 234 and 235. So it looks like the bid and ask and the mid are all very close to one another, meaning it would be fairly easy to get a position filled. I currently have a few positions, but I might do another one before too long. I do want to own more AMD. I firmly believe they're probably going to be closer to 125 by the end of the year, especially if we can get through this tariff stuff. Some of the other criteria I like these. There's a screener, so you can use the screener. Sometimes easier to find. It's up here. I've set one up. It's this put screener with delta, debt to equity, and a few others. You have to set it to filter here. I'll come in here. I'll sort it by bid, mid, and ask, and I'll look to see who potentially has some pretty good premium that I'm interested in. So it has Robinhood, which is in my portfolio list. I've traded HIMS before. A lot of these I've traded before, but it gives me some ideas. You can change the criteria, so you could say, well, return on equity, I only want high and very high. You could say debt to equity, I want it to be very low. I might take an average company and then you can rerun it. You may go, you know, you may say, well, I'll go out to 60 to 100 days. Then you can see results. And I've limited it quite a bit. And then you could save this screener and you can automate within Barchart for it to be sent to you every day, like in the morning, if this is the criteria you want. I'm actually looking to automate some of these, especially for my Discord, but it does give you some really interesting information. And the fact that you can search by using the Greeks as well as other options type of data, it's kind of a step above a lot of the other companies. And if you're testing this and you're using it, and you can actually reach out to the bar chart programmers and they'll work with you if you find some kind of an issue with it, or if you see something that might improve it. They're very, you know, they're very open to making changes and improving it. So um, I also like to look at ETFs. So sometimes you can look at popular ETFs, and I also will look at investing. You can look at like best dividend stocks. You can sort by different criteria again, debt to equity, and it kind of remembers what your favorites are. So um, just a lot of neat things you can do. But you can see, it's not my favorite. My truly favorite is Seeking Alpha. Now AMD, if we go back to AMD, and you want to do a little bit more, you can get some basic fundamental information by just clicking on the main area. You also can get news articles. You can get, the key information you might need, like what's their annual income, earnings before taxes, and those kinds of things. And then you can actually come down here and you can see they have a cheat sheet. So you can look at technical analysis, the trader cheat sheet, which I find is helpful. So it talks about all the different moving averages and where the different prices fit. But there's quite a bit here, and it's definitely both these tools take a fair amount of time to learn, and it's worth taking the time to learn. I'm still learning, especially with bar chart. There's so much there. It's you could spend days, if not weeks, just kind of learning the ins and outs. So that's what I wanted to share with you with bar chart. Let's jump into the next section where I'll share with you these 20 companies. I think you're going to be surprised, what are some of the best performers. So stay tuned. Let's jump into that now. Now, I created this with another favorite tool of mine, which is ChatGPT. I also have started working a little bit with Grok. paying for both of them, but ChatGPT created this with just a few questions. But you can see this how how amazing that it can create like a chart like this just with a few questions, and you can actually modify it and improve upon it. I, I even, which I'm going to share with my membership, I even asked it to pick out 20 companies that are just getting started, like it's currently 93 again, that might have this kind of growth going forward. And they generated a list of 20, which I'm going to share with my membership. So, which Monster Beverage Corporation, number one, if you had invested $5,000 back in 93, it'd be worth over 5 million. Um, O'Reilly's, which is really surprising, same scenario. If you invested $5,000, it would be worth 4.5 million. Some of the other names here you're going to recognize, like Apple, Amazon, Nvidia, all amazing returns that if you invested in them. Some of these, the IPOs were after 93, but the same idea. You would have millions and millions of dollars. So Apple 4.25. If you had invested in Amazon soon after the IPO, it would be worth, and again, 5,000 would be worth 3.7 million. Nvidia 3.5. I invested or started investing in Nvidia probably in 2018, and I think I have 500 or 600% return with it. Now, another interesting one is Tractor Supply. If you don't already know, both O'Reilly's and Tractor Supply have announced, I believe Tractor Supply already had a significant split. It was either a 10 or 15 to 1 split, and O'Reilly's is too. They're having a 15 to 1 split, I believe, sometime later this month. Then Costco kind of makes sense. I still love going to Costco. So 5,000 invested, 2.25 million. Some of the others, Pioneer Natural Resources, Fasternal, which a company that I use. We used it for this barnuminium. Some of the stuff that they have for helping us build the barnuminium. Align Technology, one I've not really heard. I need to kind of research a little bit. But 5,000 invested in them has turned into 1.4 million if you had invested in them right around the IPO. ADP, Automated Data Processing, they've been on my list for a while. I've looked at making some trades on them. Intuit, I use their bookkeeping. I use their TurboTax, great company. Microsoft, don't really need to say much about it. Pretty amazing. Sherwin-Williams, another one that's kind of a little bit shocking. I mean, look at that kind of return. $5,000 investment could have turned into 900,000. Booking Holdings, Loan Digital Travel Leader. Now, from its IPO, it would be like 800,000. CSX Corporation, another one I like to trade that's also in my portfolio and my watch list. It's done really well. Some of these, you know, like Home Depot, I thought it would have done better. I thought it would have done better than like O'Reilly's and some of the other companies. But if you compare Home Depot to Coca-Cola, I believe the return is almost 3 times as much. Roper Technologies, another one, it'd be worth almost 600,000. And one STZ, Constellation Brands, so premium alcohol brands. I guess that's not really that surprising. And then Lam Research, another chip maker that I've traded on before. I currently don't have any of them. I might actually look at making a trade on them too. So it's pretty surprising. You can use these tools. Some of these I'm still investing in. Apple, I've traded. O'Reilly's, I think when they have their split, I'm going to do more trades with them. I'm actually looking to do some Tractor Supply Company trades. Costco is too pricey to me. I still believe its PE is too high currently. But a lot of these, like ADP and Intuit, I also like to look at, especially if they get beaten down at some point. So that's what I wanted to share with you guys. Let me know what you think. What tools are you using? Leave a comment about a tool you think that's something I should look at and potentially do a video on at some point. Or if you have a particular company you think is going to turn into one of these top 20s, that may net you a huge amount of money long term. So as always, I try to answer my comments. I typically, within 24 or 48 hours, will respond to a comment. And I really enjoy it when people do add comments. I like to have the discussions back and forth. And as always, if you want to learn more about my membership, it's growing. We do have a Traders Club meeting coming up this Sunday. Take a look. Details will be in the description. It's probably worth taking a look. So, as always, thanks for taking the time to watch the video, and I hope you have a wonderful day.